Hello, this is Dylan Langei, branch manager and home loan officer at Evergreen Home Loans. If you're watching this video, you either have a property or are looking at a property that needs a renovation loan, needs a rehab loan, needs to be fixed up and improved, or maybe you want to, build on an addition or some sort of rehab to the property. This can be done in a purchase or in a refinance, and I'm going to go through quick facts on this product through the Fannie Mae home style product, and then also do a deep dive as well. Once again, if you're watching this on YouTube, make sure you do subscribe to my YouTube channel. I post videos weekly. There's also other construction related videos on there. If you go to my website, whatcomhomeloans.com, you can find that as well under resources and videos. Or if you scroll down, you can go to my YouTube channel right there, as well as in the videos tab, there's a YouTube button. So let's dive into it. So the quick program facts. Let's go through that first. Whoops. Sorry, construction. Oh, it was right here. That's what it was. So on the construction loan, these are just really quick facts. If you just want to watch a short version of this, here they are. I'm going to do a deeper dive if you want to watch the second part of this video. But here are the fees. So there's a $1,500 home style fee, which is essentially, they have a error right there. I got to tell my construction team. Home style fee, which is essentially the origination cost of the rehab loan, $1,200 appraisal fee, and then $350 for the appraiser to go back out there when the construction is done. It's a 9-month construction term, and you have a 0.25% of the loan amount fee if you go past that and you need 2 months. You don't need to worry about these program codes. Here are the highlights right here. So it has to be a stick-built 1 to 4 unit owner-occupied or a single-family investment property or a single-family second home. Okay, those are the allowable property types. You can also do manufactured homes, but only owner-occupied. No structural improvements on manufactured homes. MFH is manufactured home, by the way. Max renovation costs cannot exceed 75% of the subject to completion value. So basically, your renovation costs can't exceed 75% of the basically as completed value, and 50% on man homes. It's a one-time close. You can do 15, 20, and 30-year fixed options, conforming loan limits only. So it does depend on what county you're in. So if you're not in a high-cost area right now, the conforming loan limit is $726,200. That is the amount borrowed, the loan amount. And in high-cost areas, it's more than that. It's in the high 900s. Max 95% loan to value, which means 5% down on owner-occupied purchase. Single-family stick-built properties, you can do 3% down for first-time home buyers, and then max 10% down on second homes, 15% on investment, 9-month construction period. Regular PITI payments start from the first payment. PITI is principal, interest, taxes, and insurance. Interest rate is the same for the life of the loan. It's a one-time close, and then unused construction funds are applied to the loan balance. So that's kind of the highlights, but it does not explain everything. So let's do a deep dive into this product. So these are your number of units and your loan to value. So loan to value is basically if it's 97, that means 3% down. And then you've got your minimum credit score as well. So you can always pause this video and take a look at that. This is for manufactured homes, the down payment requirements and FICO score requirements. And that's manual underwriting. We don't have to worry about that. And so I've highlighted a bunch of stuff that I want to go through. I'll go through this slower so you can pause the video and read this in real depth if you'd like. So you would just pause the video right now. But I'm going to keep going to the parts that I highlighted. So geographic restrictions, we can only do these in Arizona, California, Colorado, Idaho, Montana, Nevada, Oregon, Texas, Washington, and Wyoming. Everywhere else is ineligible at this point in time. Loan limit max is the Fannie Mae max loan limit. So once again, depending on where your county is. And then for a purchase, the loan to value is based on the lesser of the purchase price plus the cost of renovation or the as completed value. So if you're buying a property for $300,000 and you got to remodel it for $100,000, that's $400,000. That's your purchase price plus cost of renovation. But if we get an appraisal based on your build and it comes in at $380,000, that's what we're going to value it at. And then refinances, it's on the as completed value. Once again, you can pause this if you'd like. But eligible improvements, right here, you can read through this. I won't read it verbatim, but it needs to be permanently affixed to the property. And so this is really good to know what are eligible improvements under Fannie Mae. And then contractor requirements, we do not permit self-help, even if the borrower is a licensed contractor. So you do need to hire a reputable licensed contractor. Permits are required prior to closing, case by case for minor renovation work. So if you don't need permits, that's case by case. Make sure you talk to us. You can pause and check that out. This is a big one, the home style construction contract. This tells you exactly what you and the builder need to agree on. So you need to have the home style construction contract, which is down here, plans and specifications, construction budget, which provides timetable for stages of completion and the schedule for advances for payments of amounts due, scheduled advances for payment of the renovation costs, and the requirements for requesting and obtaining approval of change orders. So we need all of that stuff. This is not like hey, I approve, I got approved for 500,000 and you guys will just give me the money. This is a pretty regulated program, and we are pretty involved in it. Here's the home style construction contract. That is between you as the borrower and the builder. This is exactly what needs to be on it and what it needs to include. You can pause this video as well, as you know. This is the second part that needs to be on it. Draws. So we're not releasing any funds at the beginning of the project for acquiring materials. So, make sure your builder is aware of that. Make sure your builder either has the money for that or can have a line of credit at some of these material places. And then draws are based on a percentage of work completed. So we're not, if the drywall is not in, we're not doing a draw for drywall, right? Maximum of 6 draws. So your contractor will only get paid 6 times. Make sure they're aware of that. You can pause there as well. Establishing costs. Once again, this is the as completed value, 75%. We already went over that up above. We hold all of the renovation costs in an escrow account. Contingency reserves, it's going to be 10% of the renovation costs. Could be 15% at our discretion. 20% if utilities are disconnected, because that's a riskier loan. All renovation work must be completed within 9 months. This is once again about the contingency fund. As you can see, these are 121 pages. These are very detailed programs. This is not for someone that does not want to have some work. This is a lot of work. You're going to be dealing with a contractor, dealing with the bank, dealing with subs. It's a very rewarding process, but it can take a lot of time. So a lot of these, I don't think we have anything else super important until down here at the highlighted. I'm going to keep scrolling. Sorry, this is all about credit, income, assets. These are things that I will let you know about. I'll review your application, your credit, your income, your assets. This is important. Eligible properties. So 1 to 4 unit principal, which is primary, owner occupied, 1 unit second home, 1 unit investment property, manufactured home, detached units and condos and PUDs, which is property unit development. Ineligible properties. This is important to make sure you know what's ineligible. So you can pause and take a look at that. Multiple parcels. Only 1 parcel can have a dwelling unit on it. So make sure you read this about acreage and stuff. I know there's a lot of properties that come up that people want to subdivide or build multiple houses. So make sure you read that. And then I think this is all the underwriting stuff. Let me keep going. Unpermitted additions. This comes up quite a bit. So read into this. So the appraiser identifies an addition does not have a required permit. Appraiser must comment on the quality and appearance of the work and its impact on the market value of the subject property. Unpermitted additions can be considered so long as they do not affect safety or habitability. All alterations to property have been completed in a workmanlike manner. So it can't be like a falling over lean-to or something. This is unique housing, log homes, berm homes, geodesic domes. Read into that because I know people always want to kind of do funky stuff. This is about utilities, so private roads. You can pause here. Septic, water, those are always super important and questions I get a lot. So make sure you read through those. And disaster, nothing there. And that is it. So that is on the Fannie Mae Homestyle Renovation Rehab product. If you have any questions or any unique scenarios, please do reach out to me. I'm happy to talk with our construction department about them. And once again, if you're watching this on YouTube, make sure you do like and subscribe just so you can see other videos that come out. I've got other construction videos on our jumbo construction loan, conforming construction loan, and our lot loan product and manufactured homes. So make sure you do check out the YouTube channel for more videos like this. See you next time.